You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for a little program we like to call around here, Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're just joining us here for the first time in 2017 on Volatility Views, first, you got a lot of catching up to do, but be welcome. Welcome. We loved all the newcomers to the program, and make sure you check out the archives. A lot of great articles also, but also a lot of great episodes and interviews and discussions and debates from the world of volatility. Easiest place to find all that, of course, the mothership, theoptionsinsider.com. You can also find it iTunes, Google Play Podcasts, all those fine places. Make sure when you go, if you're looking for archives there, sometimes those stores limit how far back you can go. I think only about 50 episodes or so. So if you want the full kit and caboodle, then get it via our site or, of course, via our mobile app available for iOS, Android, and the Fire OS. We don't limit you. The full fire hose, the full decade worth of content on the network is available via both of those locations. So you better make sure you have some time on your hands before you step into those, because it's a lot of content. But we'll get you. You got a long commute, you got a long flight coming up, we got you covered. And of course, however you listen, including those of you who can join us live every Friday, noon Central, 1 p.m. Eastern via Mixlr, MIXLR. We tweet out the link there via social media at Options. You can always grab it there and just bookmark it and join us every Friday if you can make it. We'd love to have you guys join us there too. However you join us after the fact as well, we'd love to hear from you guys. Just send us your questions, your comments. You guys are the reason we do this program after all, so keep those questions and comments coming. We'd love to hear from you guys. And joining me on the old program today, my usual cast of characters plus one. Let's start off in, I think, actually the literal corner office these days. I've heard a rumor, a whisper that he has indeed been bumped up. They've heard my intros of him on this program for the past year or so, and they decided, you know what, he really does need a corner office. He is Mr. Corner Office, a.k.a. hopefully someday soon to be Dr. VIX, Mr. Russell Rhodes, the head of education over there at the CBOE Options Institute. Mr. Rhodes, are you joining us from your new palatial corner office, sir?
I am joining you from the new. Can you hear it? It's like an echo chamber in here.
It's cavernous. It's like you're joining us from St. Peter's or something.
I even have two windows.
Madness, sir.
I just got to get a Don Draper couch, and then I'll kind of lay on my back and do vol views every Friday.
I'm sure I'll be on your Christmas card list going forward, because clearly I was instrumental in your upgrade to your work situation over there, your living and work situation over there. So you're welcome, sir. Well deserved. And also joining us, I'm not sure if he's joining us from Palatial Corner Office. We'll have to see. He is the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Greasy Meatball, where are you joining us from today, sir?
I am in the Chicago offices of OptionPit. It is good to be here. Good to see you. And I thought we were getting my intro music. Where in the world's the meatball? Come on.
We're working on that. We need to come up with a segment that goes with it too, and then we'll be all set. It's hard to have an intro music in the intro. It'd be kind of hard, but we could maybe work it out.
There you have it.
All right, and last but certainly not least, we are joined to complete our volatility ensemble by old friend of the program, Mr. Bill Luby, the proprietor of VIX and More, and once in a while he spends some time managing some money over there as well at Luby Asset Management. Ironically, for all of his talking about VIX at VIX and More, he only trades the bund over there at Luby Asset Management. Kind of weird. Bill Luby, welcome back to the program, sir. Nothing but the bund, 24/7.
Nice call. Yes, here from the corner office in beautiful downtown Tiburon, California, trading the bund. Interesting.
Bund all day, all night, 24/7. The most exciting asset management in the world. No, of course, I'm joking. He trades volatility-related products, ETPs, ETFs, VIX, and of course futures, and all of the above, and maybe a little bund in there too. I don't know, but I'm going to guess probably not. All right, with the team assembled, we're going to dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review for the first full week here of the new administration. We are, of course, recording this and streaming it live right around noon Central, 1 p.m. Eastern on Friday, January 27th, for all of you listening after the fact. And it's a bit of a quiet end to pretty much a quiet week, at least from an overall broad index perspective. Most of the major indices, as we're talking, pretty much unched on the day. Not a heck of a lot going on there. And VIX Cash continues its inexorable decline, its inexorable erosion heading into the weekend, well shy of the 11 handle here at this point. Actually, 1034 as we're speaking, off about a third of a point again today. So this continued Trump-era volatility erosion continues, which is kind of interesting. Speaking of which, it is, like I said, our first full week here under the new regime, the new administration, so a lot to break down, a lot to parse. It has been an interesting week. Certainly some other stuff kicking off after hours on the earnings front. We'll get to that in a little bit as well. But before we do that, Bill, since you are our guest, I'll give you pride of place, sir. What caught your eye in this week here in terms of volatility, trading, and developments and trends?
Well, here it is a Friday, and we always get a low VIX on the Friday. You've probably talked about that a bunch of times. But I'm looking now, and we were 2 cents away from setting a 10-year low in the VIX when we hit 1030. So we'd have to go all the way back to 2007 to see when we hit 1028. So we've got some really historic lows in the VIX. I see low. I almost want to say ridiculously low vol, pretty much across the board in a number of places. But considering where we are and considering all the expectations that people had about policy uncertainty and what a new administration would mean and trade wars and all that sort of thing, I'm sure a bunch of us who trade volatility are reasonably surprised at where the VIX is right now.
Yeah, it has been an interesting one to watch. Of course, we saw post-election this massive rally in the broad markets. We saw the commensurate sell-off in volatility. Then it seems like a couple of weeks ago, starting about a week or so ago, a little more, and we actually saw the actual inauguration approaching. Everyone knew it was on the horizon, but it seemed like it was all a party and good times and crushing vol. And as the inauguration approached, everyone kind of hit the pause button a little bit, and vol started creeping back in there. And then now that the inauguration is behind us and the first week is for the most part behind us, it seems like maybe the broad index party hasn't continued, but the volatility annihilation party continues, which is kind of interesting, given the fact that there are some things on the horizon. There is, of course, non-farms next Friday. The Fed's lurking, as they always are, in the ether out there. And, of course, we do have earnings. We had some big ones this week. Like I said, we'll get to those in a little bit. But there are more earnings on the horizon. So there still are a few known unknowns out there. And yet, once again, the volatility cadres out there showing they're not afraid at all to crush some vol. Mark says this week's volatility action come as a surprise to you at all?
I mean, not a huge surprise. I mean, the writing's been on the wall, and I keep telling people, vol will keep dropping until it doesn't. So don't just sit here and look at things and say, oh, well, now that it's 1040, it's got to go up. It doesn't. There was a period, that 10-year ago period, Bill can obviously give you a little more on the history, but I think we went over 2 years without seeing a 20 volatility, and I think we might have even gone a full year without seeing 15. So the idea that is a 9 handle getting a little bit oversold, maybe, but to think that means that VIX is going to go to 14 or 15 is ridiculous. It's maybe might rally back to 12. So I look at things and VIX is 1040 up till yesterday, or VIX yesterday. Let's discuss yesterday real briefly. VIX closes 1066. VVIX is below 80, and the spread between the Fed future and VIX, given the VIX level, not insanely wide. The hedging costs right now are nil, and if one is using the VIX, and periods of time like right now are the times where I feel VIX hedging is far superior than trying to use regular indexes. Because this is that time where that sticky strike of VIX is so valuable because indexes just keep running. So that's kind of my take on what I'm seeing and what we're doing. Incidentally, I just sold a put spread to the market makers. I sold the 13.5, 11.5 put spread, and they leaned the entire market to thinking that I was going to be a buyer. So I got to sell through my theoretical value, and it's because everybody is chasing vol lower, which is maybe another sign, along with the rally of 2.6% in VVIX today, that's maybe saying that things are, maybe getting a little stretched here in VIX.
I can't imagine why the crowd would think you were a buyer, Mark. I mean, what would precipitate that? Could it be perhaps the size buyer of 12 half puts? Could you perhaps have been playing around that? I don't know.
Well, yeah, and there was a size buyer of the 14 puts today. There's buyers everywhere. We have seen, there was a guy that was just unloading 12.5 puts, and he has been racing to cover the last 2 days. Apparently, his concept of mean reversion was a little shorter dated than the markets.
Well, I don't know if you know this, Mark, but if you haven't read the literature, VIX has a long-term mean of 20, and it has to revert there, and it has to revert there instantaneously. So the second it ticks below 20, every minute it is below 20 is on borrowed time. It has to instantaneously and immediately revert there. Hence all this activity we're seeing out there. Maybe you missed that part when you're reading about the VIX.
Yeah, the long-term mean is not 20. It is not. That is an incorrect statement. I'll let Bill, again, Dr. VIX and Dr. VIX West Coast kind of give you more on that, but it is just you can't do that.
Yeah, we've always taken issue with that long term. I think anyone who spent any time in the SPX pit could easily, I think, could argue against that. We've all spent long periods when it was in substantially lower than that. But that said, let's turn to the aforementioned corner office, aka Dr. VIX. What's catching your eye this week from a volatility perspective, sir?
Well, like the Sports Illustrated jinx, where they don't put Villanova on the cover of Sports Illustrated going into March Madness, so they win the national championship.
Yes.
All right. I'm trying to give you a shout out there, Mark.
No, thank you.
I did an interview about VIX, which is in today's Chicago Cranes magazine.
Oh, wow.
And I'm not saying that to toot my horn, but something as mainstream as that, writing an article up on VIX, I'm going to take that as an indicator that it's kind of like, a stock being on the cover of Time or whatever. I have a funny feeling that discussing VIX with somebody that reports on Chicago businesses yesterday may be an indication that we're at a pretty low level. With
I'm assuming you chatted.
I'm actually serious.
I'm assuming you chatted with Lynn over there, right?
I did.
Yeah, we've done our level-headed.
Nothing against her at all. It's just just the getting attention from that area as opposed to the Wall Street Journal derivatives guys talking about how.
Yeah, it is kind of funny. We've done our level-headed best to kind of keep people like Lynn, get them into the fold, and she writes about it more. So we like to see more local publications talking about things that go on here. It's always a problem. For years, I would go to New York and other places, and people would say, "How come people in New York and the Journal write about all this derivative stuff, but no one in Chicago does?" So slowly but surely, that tide maybe is turning. But yeah, that's interesting stuff. Really quickly, I know you talked about it before, but weigh in really quickly on this debate, the long-term mean of VIX. I know
as soon as Bill starts running through the great piece that he ran, I'm going to dig out a picture of like a histogram that I came up with that shows the most likely closes for VIX, and it's actually a 12 handle now. It used to be a 13 handle, but it's actually moved its way down to 12. That average, the long-term average is around 19 now, but the most likely, a good 50% of the closes have occurred in like the 14, 13, 12, and 11 levels. So you don't have an even distribution around that average, which means spending time with VIX being, an irrational tween, it really isn't all that unusual.
Well, speaking of your recent piece, Bill, there, Russell is referring to something you wrote up on the VIX and More blog. By the way, congratulations. I'm posting more again. I know you've been busy slinging the bund over there, so not a lot of time for content. But you did post an interesting thing that caught our eye. I wanted to talk about it before we dove deep into all things VIX options and VIX futures in a few minutes. You like to break down the VIX ETPs over there. I think you made some headlines in the past for making some interesting and some dire pronouncements in the headlines of your articles, which is always fun for us. But you kind of mentioned the performance compared to 2015 which was a pretty dire year for most of the VIX ETPs due to a lot of the factors we've discussed many times on this program, that inevitable erosion that hits a lot of these VIX ETP products. But that said, 2016, a little bit more of a balanced year. Why don't you go ahead and break down your findings for our listeners here?
Sure. The short story is, if you divide the world into long VIX ETPs and inverse VIX ETPs, most of the time, due to the contango, the inverse ETPs are going to have up years, and the long ETPs are going to have down years. As a matter of fact, it's very hard to find many years where the long, particularly the leverage longs, have had a positive year. Never for the leverage so far. So this was a reasonably typical year in terms of contango. So you saw the reasonably typical decay, and you had as much as 80% gains in the XIV, SVXY, and you flip the tables and you see the VXX and their brethren losing more than 60%, and the leveraged products lost 93%. That's TYVIX and UVXY. Now that may sound extreme, but as you guys probably know, that's pretty much a typical year for that grouping. So those are the headlines. You look out on the 5 months, the midterms, and you typically find about half to a third of the performance impact of the larger ones. So they move much more slowly in the same direction. And then you have a bunch of products that are dynamically allocated and have multiple holdings, go long, short, and those things typically try and capture some tail risk or something, or slow the decay of contango. And these products typically only move in the single digits over the course of the year, and that was pretty much so. 2016 was a relatively normal year in VIX CTPs, contrasted 2015, where every single product, all 24 of them, lost money, whether it was long, short, inverse, single, hedge, dynamic, whatever. So we're back to normal in terms of VIX for 2016. I'm not sure we're going to see that again in 2017, but that's pretty much the direction we started in.
Did that surprise you at all, or were you kind of feeling it? Because it was an interesting year. It was primarily a year of volatility lows, with a few outliers being, Brexit and the election and a handful of others. It was mostly kind of a year spent in the volatility doldrum. So did that performance surprise you, or did that come pretty much as expected?
It did surprise me in the fact that we had some huge moves back in January and February with China and crude oil, and then again with Brexit, and then all the election-related moves. But the interesting part of last year, as far as I was concerned, was the cycle time of mean reversion was so fast, and these moves corrected so quickly that there really wasn't much time for the spikes to compound or to have any sort of backwardation that accumulated over time to dramatically change performance. And of course, what you're really doing with these long products is you're hoping to get not just 1 or 2 day spike, but 2 or 3 weeks of panic, or one issue on top of the other, that sort of thing. So absent those type of events, it turned out to be a pretty normal year in aggregate. But try and tell someone on the morning of the Brexit vote, or the morning of the election, or at the middle, when we thought oil might be going to $8 a barrel, that, that things were normal, and you wouldn't be able to find any takers. In the long term, volatility is normal. In the short term, stuff happens.
Yeah, Bill, we had talked about this, I want to say either last week or the week before. I think we need to take a new look at how we analyze VIX, because we're seeing ginormous overnight moves that then get kind of swallowed up by the time things happen in the morning. And so if you looked at just kind of regular market hours of 2016, if you just looked 8:30 to 3 in Chicago, or 9, but East Coast people can't translate time, so 9:30 to 4 East Coast time, you would get a completely different view of volatility and what it did relative to if you looked at kind of the entire periods of time where VIX futures are trading. What are your thoughts on, how do we, now that VIX kind of trades overnight and there's these huge moves that can happen in VIX futures? I mean, the night of Donald Trump's election, or the night of Brexit, if there was a cash VIX, it would have been into the 40s. How do we analyze volatility now that it's not just a 6.5 hour day of volatility trading?
I would certainly agree. Volatility. I mean, number one statement I would make is that volatility is global, and stuff that's going to move volatility is as much or more likely to happen, as we've learned recently, in Greece or Italy or Spain or China or North Korea or Egypt or someplace that's not even on our collective calendars right now, or Mexico or whatever. I mean, stuff does happen in the U.S. and it's also going to happen not so much in equities, but it's going to happen in other asset classes. There's going to be a currency issue somewhere, and that's going to reverberate, or there's going to be a commodities issue in oil or gold, and that's going to reverberate. So I think if you're looking U.S.-centric, equity-centric volatility, which is the VIX, then you're not going to see the freight train coming in terms of the globe or in terms of other asset classes.
That's a good point. We've been so, some may say, myopically focused on these domestic products, partly because, that's what trades in the volatility spectrum. You mentioned, overseas volatility products. There are a handful over there like Euro stocks, but, it's a far distant second in terms of volume and liquidity than anything you could do here. And this is the problem we saw, magnified back during some of the recent European crises of the last few years. People really wanted a large and liquid thing that had a lot more exposure to the European continent and the volatility there, and it really just wasn't available, at least not in the size that they're used to when they're trading domestic volatility products. Speaking of domestic volatility products, let's look here over to the futures, the aforementioned VIX futures. It has been an interesting time. We've been discussing a lot about the premium to cash, and therein right now the cash, like I said, right around 1040 or so shy of 10.5. We're seeing the front month future a little bit more than 2-point premium, about 2.10 out there, right around 12.5 or so out there, and a little bit more out there. And then the 2 months out, about about 3.5 or so out there. So pretty aggressive in terms of, but not perhaps as crazy as we've seen in recent months. Anything out there? It could be Bill or Dr. VIX or Mark catching your eye in the VIX futures and the term structure before we move on into the weeklies. Going once, going twice. I guess that's going to be your.
Yeah, I mean, I'm just saying. Oh, Russell, go ahead.
You're so quick. You're both being so quick. I was just going to say, with the term structure, and I guess this is part of the weeklies deal, but looking at the money implied vol for VIX options, there's not a single at the money straddle that's above 80 right now. And typically, at least the near dated ones would have would be a little bit higher than where we would see skew. So it's, when looking at the term structure in that fashion, it's difficult to come up with anything that says volatility that you can say, well, here's a pocket of a higher anticipation with respect to volatility. It's nowhere.
Mark, you have some thoughts on that as well?
Yeah, I just think that with how stretched volatility is, normally with this timed expiration, would February, it looks like 18 days, would February be trading at a 2-point premium? No. But do I think with VIX in the 10s that a 2-point premium is really wide, given, as Russell just stated, volatility is low, VIX premiums are low, then no. Again, this goes back to hedging costs. If one wants to use VIX to hedge, one can do it. We saw yesterday, and this is in a non-weekly, somebody paid 9 cents for the 1521 by 2 in April. They bought 2. When was the last time that someone could buy the 20s and pay less than a dime on a 1 by 2? $5 wide. That is just dirt cheap hedging costs. And with the April future at 15 or the March future at 14, those are all levels where if we get any real movement, they will move. All right. The thing to recognize, the Fed future at 12.5, if we get a couple of days of selling off and VIX moves to 14, that future is going to fly. And so just be aware that's on the table.
The old 1 by 2 rears its ugly head again. Speaking of ugly heads, it's time, of course, for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, and before we even get started, Mr. Dr. VIX, I hear you have your own intro music to perhaps suggest to the group, sir.
Of spaghetti or covered with cheese.
It's lovely.
I lost my tomato.
That, if I got to put up with that,
that's amazing.
We're just setting new standards of professionalism every day on this program.
Now, I asked permission. You know that. I wouldn't have done that without permission. So,
welcome
you are
to the corner
a
office.
Conspirator. So, nothing's going on in weeklies. Next. No, actually, on Wednesday, somebody I was taking a look at the February 8th expirations just because we do have an employment number. They still do report that on Fridays, although I think we got the most muted response to an employment number ever. And I'm just being a little over the top with that. We had a pretty muted response to the last employment number that we got. I think the one that's coming up on the first Friday of February, which is just before the February 8th expiration, and is also right after an FOMC meeting that we get a little information on February 1st from. So to go along with what Mark Sebastian was just talking about, if we get any minor sell-off out of the S&P 500 or the stock market based on those two events, you could see something going on in the February 8th futures, and I'm sure it would definitely work its way into the February 15th as well, which are not a weekly expiration. So I found a couple of, I'm not going to say large trades, but large trades relative to the VIX Weeklies world from Wednesday. Somebody actually sold over 500 of the and this is a trade that I'm just going to say it, that I just wouldn't do. Somebody without doing anything else sold over 500 of the February 8th 12 calls, and they got 80 cents for them. But I just, maybe they're taking advantage of a couple of events on the horizon between now and February 8th and being able to get some premium there. But that one would worry me a bit. Somebody else taking the other side came in about 3 hours after that seller, and they bought 250 of the 13.5 calls for 45 cents, which, again, as Mark Sebastian said before, learning of his new intro music, it would not take a whole lot for those options to benefit from something going on in the equity market.
Yeah, we're always kind of reticent here to recommend or discuss naked outright shorts in VIX land, particularly on the call side. And you're right, that does seem, if there's any area where it is prone to outperform, it is to the upside, hence all the call activity, even though, as we just said at the top of the show, sometimes it can languish long periods to the downside. Our friend there obviously hoping for that, or putting on those calls perhaps against something else he's got working elsewhere. Speaking of elsewhere, let's turn our attention to the mothership VIX options now. Actually a fairly decent week, all things considered. And actually with today, a pretty decent volume. The average, the ADV out there at around 585 or so right now. And today so far, even though we're only about halfway past noon here in the central time zone, the one true time zone, then we're already hitting about 473,000 contracts. So it seems like we're on tap for a pretty high volume day, certainly probably north of that ADV. So perhaps today we'll continue the spectrum. Yesterday about 638,000, Wednesday 613,000, Tuesday rock'em sock'em 863,000 contracts, and Monday the lightweight of the group a meager 427,000. So a pretty decent week, all things considered. Certainly compared to, let's say, Q4 of 2016, where we were struggling to look for big trades over 10,000 lots here or there. This is a breath of fresh air. Overall, VIX about 2.5 to 1 calls over puts, which is about where it tends to reside. Actually, a little bit higher than that now, about 2.7. So it's not by no means call heavy. I'll let you know when it gets there. It's got a ways to go before it gets there. It's kind of living in this normal range right now. And in terms of what was lighting it up this week, or the hot strikes, the top 10 strikes out there in VIX land, number one with the bullet yet again, the Feb 21s, just a tick under 400,000 contracts, 394,000 to be precise, followed on the heels by the number two, the little more reasonable Feb 17s with about 381,000. So near-term upside in VIX is where the action is. Feb 22 is number three, falling off a cliff a bit there, down to 265,000 contracts, followed number four by the Feb 20s. It's kind of just a near-term Feb call strip here, 232,000 contracts open there, followed by the even more reasonable Feb 16s, 218,000. Then we get down to number six, to the aforementioned and the first put on the list, the Feb 12 half put, 182,000. I think Mark Sebastian's got a little bit to say about those, followed by, once again, the just an undefeatable 30 strike, this time in February. The Feb 30s with 173,000 contracts open for the number 7 spot. Number 8, where we find our first and only March on the list, the March 15 puts, also puts, interestingly, with 152,000 contracts open, followed by number 9, the Feb 28s, also right about a tie there, 152,000. And then rounding out the top 10, the Feb 23s with 149,000 contracts open. Overall, open interest just a tick shy of 5 million, or actually about a tick shy of 7 million, excuse me, about 5 million on the calls and about 1.8 million on the puts. Mr. Greasy Meatball, we were joking earlier, but I know you've been paying attention to those puts, hence you're setting up that put spread to go around that 12-half strike, and also perhaps leaning on the crowd to think you were buying something today, so well done on your part. But what was catching your eye out there in VIX options activity this week?
Things have just that big April 1x2 was really, I think, a sign that people figured out that hedging costs are low, and just the birth of put trading in VIX is, I think, phenomenal. And I think it's going to change. I think we're going to see a change in VIX vol, where some of the out of the money stuff, maybe we'll always have that reverse skew. But I think the let's just blast the 12s and 11s and 12.5s like that guy was trying to do, that might be over. Although there was a huge March 12 put seller today. I was a little bit no thank you, ma'am, on that one, but that was the big trade of the day.
Someone else perhaps leaning the same way you are and taking advantage of all this surprising willingness to go out there and just gobble up some downside in VIX. Bill, I know you watch primarily the VIX ETPs out there and, of course, the Bund, but anything catching your eye out there in VIX options activity this week?
This is the type of environment where I find it hardest to trade the VIX options. So I'm always amazed that other people are so active, because there's with the VVIX, 80-ish, it's all the options are relatively low. On the other hand, there's just enough contango so that when you start getting any sort of long bias, then you're swimming upstream like a salmon. So I like to look at things like straddles and that sort of thing. But I generally don't play in this market. I take a peek at it, but I wait for volatility to move so I can get some sort of value for anything I sell. So I'm mostly on the sidelines here, just trying to see who's doing what, and not really paying that much attention.
Because, of course, we know the Bund is rocking and rolling, so that's where all your attention is. Speaking of rocking and rolling, it was an interesting evening from an earnings perspective. Yes, it is earnings season, so we get to sink our teeth into a little bit of earnings volatility again, which is always fun. We like doing that here on the show, and I know that it always piques Russell's interest as well. And it was an interesting night last night to watch a lot of the earnings announcements coming in. In fact, we were profiling a lot of them live on the Option Block program, and it seems like it was a resounding overbid, shall we say, when it came to earnings volatility. Everyone and their mother was loading up on some vol, really pricing these straddles fairly aggressively in terms of just bidding them up. And we did not see anything commensurate to reward that in the after hours, to put that euphemistically. Let's start off with the big A now, the big alphabet kicking it off. They closed last night right around 852.70 or so. They're pricing in a $34 move. Yes, $34. So 4% is what they were expecting. In the after hours, we saw it move a bit. It was rocking and rolling a bit in the after hours. I think the highest we saw was to the downside, about 18 handles or so. So a little over 2% to the downside. And today, as we're talking, the stock's right around 850, so off a couple of bucks. So premium sellers are laughing all the way to the bank on that one, after maybe a little bit of taking some tums in the after hours, but that was pretty much that remedied itself pretty quickly, and then you were doing all right. Good old Microsoft was next up on the docket. They were also pricing in a fairly aggressive straddle. Again, can't really blame them. Looking back at Microsoft, it's been one of the names that's been most prone to, shall we say, over-deliver in recent earnings quarters, after having spent the better part of a decade as lost money. And they were it's closed yesterday right around $64. They're pricing in about $275 on that straddle, so a little over 4%, about 4.3%. And we saw it move a little bit in the after hours, about a little bit less than $1, so about nearly 1.5%. And today it's up about $1.60 or so in today's trading. So still well shy of that $2.75 straddle. Intel, my old stomping grounds, closed yesterday $37.60. They were pricing in about $1.25, so about a little over 3%, about 3.3%. After hours, it pretty much didn't do anything. And today it's trading a little bit higher, shall we say, if I get the exact quote. Where is it? Yeah, 38.06, so about 40 cents up higher. So again, a dramatic underperformance. PayPal also popping off after the bell yesterday. This one closed at about 41.5. They were pricing in a little over $2, about $2.12. That's about 5%. What we saw in the after hours was a resounding quarter. It moved, so not a little bit more than 0.5%. And today it's off about $1.50, so a little bit more in today's trading. Still shy of that 212 straddle, though, but a little bit better than some of the other names we were talking about. And last but not least, good old SBUX. They were coming off after the bell as well last night. They closed right around 58.5. They're pricing in about 220, or a little bit shy of 4% for that straddle. And today, as we're actually after hours, it moved quite a bit. It moved actually a little bit more than that, about 3.75%, I believe. So it's one of the few names that actually at least touched the outer periphery, the outer bounds of its straddle before retreating. Today, it's off about $2.30. So it has that straddle. Starbucks was one of the few that actually seemed to meet the expectations here of all of our listeners, which is actually surprising because and when you did our poll, it was Google that won our poll. We asked you guys a lot of earnings on the horizon. Which company do you believe will outperform their earnings straddle by the largest margin? If you picked none of the above, you were the winner. But we gave you the choices of Google, Microsoft, Intel, or Starbucks. 41% of you picked Google, 32% Microsoft, 15% Starbucks, and 12% Intel. Starbucks, the only one really relevant in that conversation right now. So I guess the 15% of you were the savvy ones amongst you. That said, Mr. Rhodes, I know you like watching a lot of earnings. Vol, have you been surprised so far by the resounding meh that has been earnings from a volatility perspective?
Yes, very much so. And the reason being, it has to do with the regulatory environment around earnings. A lot of people don't realize this, but annual earnings, which is what we're going through right now for most companies, there are bigger repercussions if you are not accurate with respect to your annual numbers versus your quarterly numbers. So companies are usually a little bit more honest around their fourth quarter earnings numbers, and because of that, normally you would see more volatility at this time of year. So I'm dramatically surprised that we haven't had a couple of headline grabbing earnings announcements to the downside, mostly to the downside actually. But I guess America's first, and we're all winning now.
Hashtag winning. It was kind of interesting. I thought there would be, if I picked in our poll, I was leaning for Google, just from a pure statistical perspective. It seemed like the easiest to have an outperformance. Didn't really happen. One of the quieter, I'll have to look back at the charts, one of the quieter earnings we've seen in quite some time for the old Googs / Alphabet. Bill, do you watch a lot of individual earnings volatility at all this time of year?
I do. Particularly since I play a lot on the technology ETF space, particularly Microsoft and Google, and very interesting comments by Russell. And I guess I'm going to reinterpret that for our readers, that we usually get an honesty spike in Q4, and now it looks like we have honesty pretty evenly spread out across the year. So that's what's caught some of us off guard here, apparently.
Bill, the one I'm looking at in terms of volatility, there's this company near you called Apple, you might have heard of. And right now I'm looking at, if you want to look at like VXAPL, the VIX of Apple, it's 21. And this is ahead of earnings. Knowing how VXAPL, up until the last 4 months, I would have thought 21% volatility was a buy just at any time, not even in front of earnings. That is how cheap some of this stuff is being crushed. I don't understand it, and I don't know if you're seeing that across some of the other big tech names. But I mean, 2 years ago, you would have scooped 21 volatility every single time and won big, just about every time. So I don't know what your thoughts are there.
Not Apple specific thought, but my thought about the sector and the large cap tech space in general is this one of the few sectors that actually really got hit hard after the election. You probably remember for a week or two, large cap tech was a significant laggard, but ever since then, it seems like it's been part of everybody's playbook in terms of buy on the dip, and whether we're talking Apple or Facebook or Google or Amazon, they're just buy in the dippers are really out in force. And when you have the buy in the dip crowd coming out and you're seeing new highs, and the Nasdaq outperforming the S&P, then I think the downside vol is it has limitations until the buy and the dippers flinch. That you're going to see the IB coming in, and right now that's part of the game plan. It seems to be part of many game plans.
Yeah, I'm looking at earnings. Google. I'll bet you by the middle of next week, Google's going to be up from where it was pre-earnings. Just the way the market's been acting. I just think, maybe you don't buy the earnings call, but if you go out a few weeks, there's some real value to get long if one wants long exposure to these names.
And keep in mind, these are the companies that are at the top of the repatriation hierarchy, if that's going to happen, and would have been massively hurt for the most part, for any sort of trade war. So as trade protection fears subside a little bit anyway, and the possibility of repatriation, which has kind of been on the back burner. As that may move to the front, then I think you'll see a lot more action in these, up or down.
Just an extra thought on Apple. The 3-year average moves a little bit under 5%. We did get, I think, only a 2% move off of earnings last quarter, and we're also we all have such short memories that I wonder if there's some people out there thinking that action around Apple on earnings is just a thing of the past. But we do get about 8% moves every once in a while, and usually when we see a small move, they often are followed by big moves. So it'll be interesting to see what happens Tuesday after the close.
Yeah, it seems like a distant memory now, those days where everyone and their mother had to just pile into Apple calls ahead of earnings, and the zealots were out in full effect, and you could do, all sorts of verticals for just incredible levels that you never could do in any other product at any other reasonable time, because they bid up that call skew to just such ridiculous levels. There were good times, and yet, now it seems like those days perhaps behind us a bit, at least if the volatility skew and the overall volatility is perhaps indicative of it, because we also used to the zealots would also just en masse bid up that volatility as well. So the fact that they've allowed Apple to approach these relative lows, approaching earnings, also another sign that perhaps the Apple zealots and the mega volatility buyers that used to flock into that name en masse around earnings have perhaps moved elsewhere. Maybe they've moved to the commodities, which we will get into now a little bit, of course. Our friends over there at SBUX, proprietors of so many different commodity VIXs, including the ones we like to watch, OIV and OVX. By the way, if you really like commodities and commodity vol, stay tuned for TWIFO this week in futures options coming up at about 1:30 p.m. Central, 2:30 p.m. Eastern, where we'll break down all this fun stuff, crude oil, volatility, skew, all that great stuff in a lot more detail. I'm going to do it live, too, so stay tuned for that in a little bit. But right now, let's break it down courtesy of the various and myriad VIXs out there, including OIV and OVX. OIV, of course, the VIX of WTI. OVX, the VIX of the USO ETF that so many of you guys out there like to trade, even though issues with it be damned, you like it. And both of those still shy of the 30 level, kind of, again, reflecting that overall reluctance. Perhaps we do need another event out there in terms of crude to really shake us loose of this new kind of volatility regime that we're in and cause something to happen. It used to be that had to be an aggressive move to the downside. That's where the premium is. And long term, that's where the premium still is. The puts are still leading the dance. But near term, look at some of these near term months. If we had a sharp spike to the upside, that would also cause some vol to get bid up, because those near term calls have a little bit of life to them. Certainly more than they did, let's say, 3 or 4 months ago when they were pretty much dead money out there. Gold vol also kind of a little bit in the doldrums, right around 14.75 or so right now, kind of on the lower end of its 52-week range after having spiked to a variety of levels, including about 24.5 back in November recently, kind of trending off there as well. And our old friend TYVIX, that Treasury VIX, right around 565, also kind of in the, middle of that range. Mr. Rose, maybe we'll start with you. Any of those VIXs, or perhaps some other SBUX commodity VIXs leaping off the page to you?
I went to look at the CBOE.com volatility page, and I got an inability to connect error. So what jumped out at my page was, you can't see the quotes right now, Russell.
We've sent so many people to that page, we've crashed it. So that's the power of volatility views.
We've crashed it. Everybody is trying to beat me there. So I'm going to have to, due to this site not being reached, I'm going to have to pass that one off to one of the other guys.
Good to know that it happens to the best of us, not just sites like Options Insider, but everybody. SBUX can have a nice down day as well. I don't know, Bill, anything catching your eye out there in the commodity landscape, obviously aside from the bunt?
2 quick comments. First, thanks for old technology Excel to bail me out here. But
VIX and more is the cutting edge. What are you talking about? It looks like it was built just a few months ago with the latest HTML5
Excel
technology.
in the cloud. It's high-tech Excel. So look very closely at OVX 29. That is the low level since we had the OPEC Thanksgiving massacre back in 2014 when they sent the oil plummeting. And OVX hasn't been below 29 since then, and it's been pushing at it the last couple of days. So if it goes through 29, it may go back to the previous range, which was down in the low 20s. So that could be an interesting number to watch. The other thing is the gold took a quick peek at the last 6 years of gold volatility, and yes, it's low. It's actually in the bottom 10% of where it's been for the last 10 years, and most of the other stuff is pretty middling in the ones that I watch closely. But oil and gold are two you should pay attention to, readers out there, and particularly oil at the moment.
Mr. Greasy Meatball, anything catching your eyes in the land of grease or shiny stuff or anything else in between?
You know, I keep waiting for bond vol to catch a bid, because I think that's where, if there is any piece that sends the markets out of control, I think it's probably coming from the bond market, if anywhere.
That's a great point.
That's why I threw in
CBO product. They come up with a foreign sovereign bond volatility index. That would be a really interesting product.
Don't give them any ideas, Bill. Their product development team already has enough crazy. That's why I like to throw in TYVIX. You're right, we're not really seeing that reflected yet in TYVIX, since people are writing every now and then asking about some bond vol. Not so much on the international spectrum. Maybe we'll have to get into that as well. Meanwhile, we have to get into some of your questions, because it's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, we're coming up against it, so we'll see how many we can get to here in the old segment. Let's start off with this one. I like this handle. He gets points for that. VolBug. VolBug. Mr. VolBug wants to know, hi, Mark. Well, hello, VolBug. Can you and the crew give your assessment of SVXY and whether you think it tracks well, and what are some of the vulnerabilities? Thank you, sir. Well, interesting one. We touch on the exploding universe of VIX ETPs and ETFs out there quite a bit on the show. Perhaps not as much as maybe we should. I know that's Bill's area of expertise. Aside from the Bund, he likes to watch all those out there as well. SVXY, if you're not familiar, listeners, is indeed the ProShares Short VIX short-term futures ETF. Say that 5 times fast. I dare you. It's right around 121 or so right now. And looking back at where it's been, as you might expect, given the fact that particularly the last few months have been a decent time to be short vol, this one has trended upward. It's no surprise ever since right around the time of the election, when it was hovering right around, I'd say the mid to low 80 handles, right now at 120. So pretty much a 50% increase, thanks in no small part to Mr. Trump, which is kind of interesting. How many times can we say that with a straight face, that a short VIX ETF is blowing the doors off? But that is indeed the case. Up another 1.5% or so today. So it's been an interesting time to be watching these. Maybe Bill, we'll start with you, because you just did write a big post about all these things. What are your thoughts? As Mr. VolBug asks, what do you think of SVXY? Do you think it tracks well? And what are some of the vulnerabilities?
Well, I'll try and give the short answer here. Tracks well depends a lot on your expectation. Tracks the underlying index well, yes. If you're familiar with the underlying index, then you should read the prospectus and learn about it. And I'll just leave it at that for now. Tracks the VIX futures reasonably well, because it is a basket of the first and second month VIX futures, which is what goes in the index. So yes, tracks the front month reasonably well. Yes, tracks the second month reasonably well, depending on where we are in the cycle. Tracks a weighted average of those two extremely well. Tracks the VIX index. No, not very well at all. Directionally correct most of the time. The more important issue, the big vulnerabilities, a big VIX spike, a huge VIX spike theoretically could shut this product down, or at a minimum incur some significant overnight losses. Backwardation, the downward sloping curve with a front month higher than the second month is going to eat into the product on a daily basis. And an issue that a lot of people don't fully appreciate is compounding. If you had a lot of sharp up moves and sharp down moves, that's going to significantly decay the net asset value in these. And those are 3 things to watch out for. This is something you really need to understand by studying the prospectus and watching the product.
Yeah, this one's not really for the faint of heart or for first timers. If they're coming to this show for the first time or they hear about VIX Cash on CNBC, to dive right into SVXY might be going into the deep end of the pool. That's a good point too about how a sharp VIX spike could really just wipe the hell out of this thing in the blink of an eye. So if you are trading this thing, you should be cognizant of that. Russell, I know you heart a nice SVXY a little bit here too as well. What are your thoughts here from Mr. VolBug?
I heart SVXY. I think, it's a great way for individuals who have the stomach for it to get involved in taking advantage of a short volatility strategy. You just got to know that there's going to be some pain along the way every once in a while. But actually, I'm getting ready to skedaddle out, and I've got to go teach a class next week in Warsaw, Poland. And I'm actually going to be teaching a class on being short volatility, and I'm going to use the SVXY performance as a clear indication. So it's a good teaching tool to show people how you can get run over every once in a while, and that's part of the game when you're short volatility. But it does exactly what you would expect it to do. The one thing I did want to point out, and I have not been able to verify this, but I was at Inside ETF earlier this week down in Florida, and I was talking to somebody that was formerly with ProShares, and they told me that they had run a correlation analysis with UVXY, VXX, or VXX versus VIX, and they said it actually correlates very, very closely on a daily basis to VIX. It was like they said it was a 0.98. I've got to run the numbers or something and check that myself. So when you're talking about the exchange traded products doing what you want them to do, if you're trying to get something for a one-day trade that's going to give you VIX-like exposure, UVXY might actually be it. Now, keep in mind that if you don't get the move to the upside, you might be under some pain as well. But I thought that was an interesting statement out of somebody who had nothing to gain anymore because they weren't with ProShares anymore.
It is interesting. I'll have to hit that conference next week. Meanwhile, we still have to keep rolling. Coming up against it into our final segment, the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to the Crystal Balls, the portion of the show where we all guess wildly about the future of VIX. I was doing pretty well last year. Won a couple weeks ago. This week, I guess I technically win, but I don't really count this one as a win. I was the closest. We were all, though, so far off. None of us faded VIX anywhere near as aggressively as the market did today. I was the cheapest with 11.55. VIX Cash right now, 10.41, so over a handle off. I don't really count that too well in the victory books, even though Andrew, who was taking your seat, Mr. Greasy Meatball, was at a 12.01. He was split in the middle between me and Russell, who was once again buying all the vol he could get, 12.34. So all of us pretty much to the north last week, so big swing and a miss for all of us. That said, Mr. Rhodes, you got to head off to Warsaw soon, so give us your pick, sir.
So I think it's really funny that I was the high guess at 12.34.
That's a sign of the times.
I mean, really think about that one for a second. And so when you said that, where do we got next week? We got an employment number. We got me in Eastern Europe causing trouble. Oh my gosh, I'm going for 12.99. I think it's time for things to start moving up.
Time for things to start moving up. This time it's for real. This time it's really going to start moving up.
This time it's for real.
I know you got to hop off, so if you want to do your quick plug now, you can go for it too. What's coming down the pike in the land of all things live vol and SIBO?
Well, I want to give a shout out to the Derivatives Club at Ohio University in Athens, Ohio. I got to spend part of the morning with those guys. And at the very end, one of the students said, "Dude, you should have a podcast." I was like, I do have one. It's coming on next. So I think they actually are listening.
That's amazing.
Right now.
Those folks, what are they doing? They haven't been in our chat room all this time. Well, they should be in there now because they could heckle you all the time like I do during the show, which is always fun. Thank you for that, sir. Enjoy your trip to the volatility mecca of Warsaw. hitting the hot spots, sir. All right, next up, Bill, you're our guest. You get pride of place What are you feeling? Obviously, we were not as aggressive fading VIX as we should have been last week. What are you feeling for this exact time next Friday, sir?
Well, I normally would consider an 1178 pretty low. So I'm going to go with 1178 and just ignore the fact that it's more than 10% above where we are right now. We've got the Bank of Japan next week and the Fed and an employment report. So, we've got ample opportunities to move the needle a bit.
Yeah, I'll let you go, Lex, Mr. Greasy Meatball. But I am kind of feeling what you're putting down. I'm not feeling as much as Russell is, but I am feeling. I think we got to be a little bit higher. That's my clue for where I'm going. Mark, what do you got going next?
You got a little bit higher. So I'm just gonna weekend adjust VIX, which would be call it 6/7%, and I'm gonna put us at 1105.
Didn't you sell the, what was it, the 14, 12 half put spread? Is that what it was?
Yeah. That's called trading. I got to do that. I'm still long the 12 half 12.
Okay, all right. I was going to say, you should be talking up your position here, sir. What's going on with you? What did you say? What was your number?
1105.
Oh, wow. Aggressive. Yeah, I'm feeling a little bit more. I'm not feeling as much as Bill. I want to give this is the challenge of being the host. I want to give Bill a little bit of room to run because he's the guest, but I am feeling right about where actually I'm feeling remarkably close to my guess for this week, which was 11.55. I will go a little bit lower. I'll go exactly 11.5 to give Bill that extra 0.05 of wiggle room there. That's my hostly gift to you, sir. And unfortunately, with that means there's the music. That means that we have come to the end of this epic journey through the world of volatility. We kicked things off looking at the first week of the new regime, both volatility-wise and politically speaking. We also dove into Bill's breakdown of every single VIX ETP in existence and their performance over 2016. Check it out over there at VIX and More if you haven't done so already, as well as all things VIX Futures and some interesting puts, including some put sales by the Greasy Meatball out there in VIX Options. Earnings disappointment across the board, at least from a vol perspective. We were hoping for a little bit more of something to talk about today, but everyone, bit of a resounding premium sellers winning the day out there. Then we broke it down finally with some SVXY debate, which is always interesting. But before we go, one last time, Bill, if the listeners want to find your blog or your asset management and all your detailed thoughts on the bund, where should they go? What should they do?
Google VIX and More, vixandmore.blogspot.com, and more. Lots of content is on the way. Luby Asset Management, best way is to email me at bill@lubyasset.com. And I've got an interesting article coming up in a couple weeks at Barron's, Volatility in the Trump Era.
Oh, there we go. I like it. And listeners, if I scared you off with all my bund talk, I was just joking. So don't avoid Bill's blog because of that. He doesn't talk about the bund.
And there's no truth to the rumor that I now actually have a man bund.
No. I'm looking at a picture right now, listeners, and that is not indeed true. I can't say the same for the Greasy Meatball, though, sir. So how is your man bun, and what is coming up in the land of the pit?
We just had a webinar last night on trading earnings and volatility. Go to optionpit.com/gamma. That's also where you can purchase our upcoming course, Buying Options and Being Long Gamma, which is going to be a great 4-hour course on February 4th. So if you want to learn how to buy a call or buy a put, and if you think, I should always sell, this course will change your mind.
All right, and that's going to do it for this epic journey through the world of vol. On behalf of Bill and Mark and Russell and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, and for the hardy souls out there who join us in the chat room. Stay there. We'll be back in about 25 minutes with TWIFO. So if you're into commodity volatility, we're going to be talking that with our friends over there at CME, as well as Quick Strike and our friends at Nadex. So it should be a fun, I think we're going to be in studio in a few minutes, so that should be fun. Stay tuned for that. We'll see you back here in 25 minutes for TWIFO, and we'll see the rest of you back next week for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.